Today, the stock market is not it's doing badly again. It keeps going down, and I'm going to explain to you guys exactly what's going on with the stock market and why your stocks are bleeding again today, and also why it suddenly got really, really hard to buy a house. So get comfortable, buckle up a seatbelt. We're going to get started on the Black Financial Channel right now. Good morning, everybody. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, excuse me, we talk about Black wealth and Black economics every single day, sometimes as much as 10 times a day under one condition. The condition is that we are Black first. Black first means that we put ourselves at the top of the priority list. Black first means that we educate our kids. Black first means we want to break generational curses. We do not continue them. Black first means we will take the lead in economics and wealth training over the next 50 years. If you agree with this philosophy, put a B1 in the chat. Put a B1. Let me know what city you're coming from. Jerry Early's from Los Angeles. Errol says, what's up? What up from Pompano Beach? Good to see you, Errol. My name is Corey. Good to see you. Clyde Lawrence from Baton Rouge. Terry Cobb out of Atlanta. Terrence Tech. Peace from Rhode Island. Good to see you, Terrence. And Vicky Opido. I hope I said that right. Anyway, all right. So today is another another bad day for the stock market. I hate to have to bring bad news to you, but it looks like the Dow is down by about 500 points today. And I'm still getting to the bottom of this, and I'm going to kind of explore some of this while we're talking. The big thing that actually brought me to speak to you today, it has to do with mortgage rates. According to Yahoo Finance, the average mortgage is approaching about 7%. They said it's actually 6.7% for the average 30-year fixed mortgage, and this is causing people to get out of their home deals. If you increase that interest rate, it makes the monthly payments higher. You're seeing a kind of a shift in the credit markets. The demand for homes is dropping. The reason the demand for homes dropping is not such a terrible thing is because what that does is that reduces inflation. The reason that inflation was so high in the first place was because demand was out of control. The mortgage rates were extremely low. There was capital available everywhere. So when my wife and I bought a house in Atlanta right during the pandemic, I don't know if that's a smart move, but we did it anyway because we wanted to own the house. We had to fight for that house. We really had to fight for that house. And I've never seen a market like that. It was really out of control. And the problem with an out of control market like that is you're going to get inflation that is ridiculous. So in order to squash inflation, the Fed has been increasing interest rates steadily. Now you're paying, close to 7% on a mortgage, probably a little bit higher in most cases. And so, it's kind of comes with the territory. This is not a surprise. This was completely expected. And in fact, though, what's interesting is many of you who are over the age of 40, I assume you can remember when mortgage rates were always that high, when they were always 7, 8, 9, 10%. I don't know. Give me a yes in the chat if you are over the age of 40 and you remember when a 9% mortgage wasn't a crime. It wasn't the end of the world. Whereas I talked to a young banker who's in his 20s and he said, oh my goodness, this is crazy. Mortgage rates are actually approaching 6%. That's just insane. And I was like, dude, I know people that had 15% mortgages. So I'm not saying that it's okay. I'm not saying it's not a big deal. It is pricing people out of homes. But the other thing that was pricing people out of homes was inflation. Because the mortgage rates were so low, the prices were getting bid up like crazy. So now, did you know that after the pandemic, only 10% of all houses were available for $300,000 or less? Did y'all know that? That literally only 10% of the houses were available for under the price of $300,000. Now, I don't know about y'all. I remember a time where a $300,000 house meant you were balling. That meant you were living good. Your life was solid. That doesn't mean anything anymore. So ultimately, everything's a give and take. Everything's a yin and yang in finance, and that's just what it is. And let me just tell you a little secret. Those mortgage rates are going to keep going up. They're going to keep going up. By the time the Fed is done, you're going to see an average mortgage rate of probably about 8.5% to 9%. Literally. So you may want to go ahead and lock in. If you're thinking about buying a house and locking in a mortgage, sooner might be better than later. That's just what it is. Okay. So anyway, do me a favor, hit the thumbs up button, thumbs up, share, subscribe. And also, by the way, I want to say thank you to those of you who hung out with us last night. Dr. Claude Anderson came by every Wednesday night at 8:30. We do a free Powernomics training in the Black Business School where we're reading Dr. Claude Anderson's books in extreme detail, and I'm analyzing them for you. This is a free class to the public. So feel free to join us. If you go to my website, boycewatkins.com, you can see the Powernomics training. And also, if you want the archives for today only, the archives, all the lectures I've done probably about 60 of them right by now for the last 1 year and 3 months. All the archives are available for 76% off. So if you go to boycewatkins.com, you can find the archives for 76% off if you'd like to get all the Powernomics lectures and own them for life. They are yours for life, plus any new lectures I added in there, those are yours too. All right, so let's talk about the stock market real quick here. So right now, basically, I'm looking at CNBC. It says the Dow tumbles by 500 points. So something happened. Something probably occurred. I can't imagine that this is a no news sort of move. Let's see here. Stock slump Thursday, erasing gains from the previous session as tech stocks slid on the back of a decline in Apple shares. Okay, so Apple drops that caused the tech stocks to drop because Apple's kind of the behemoth. Apple is seen as the safe haven. Apple's seen as the big dog in the room. Apple is the Debo of the stock market. So when Debo gets punched in the face, then everybody gets scared because if they can take down Debo, then they can take down anybody. So Apple is kind of the Debo of the stock market. A decline of more than 4% in Apple shares weighed on the major averages. Bank of America downgraded the tech stock to neutral from buy. So at Bank of America saying don't buy Apple. They said when you get that level of concentration, you're also going to have more volatile indices. Apple just wants you to think that it's a macro problem as opposed to a product cycle problem. But the reality is that they're dealing with both right now. So what they're talking about specifically is Apple. That Apple is just announced that they're going to actually not increase their production of the iPhone because they did not have the demand to justify the increased production. They also kept the prices stable. So they're basically saying, look, we don't really know how we're going to grow in this economy. And I guess that's rattled the markets. So let's see. They said a stronger than expected jobless claims report didn't help sentiment. Building on the notion that the Federal Reserve will keep doing aggressive rate hikes to fight inflation without concern that it's going to hurt the labor market. Boom. There's your movement in my view, at least domestically. Because the employment numbers came in good, people know that the Fed is going to keep hammering away on the inflation rate. In case you don't know the narrative, the Federal Reserve is increasing interest rates so that they can reduce inflation. That's how you reduce inflation, is they keep hiking up what they call the federal funds rate, which is the rate that banks charge each other to lend each other money. So when they keep hiking interest rates, they're pushing down inflation. The concern is that as they're pushing down inflation, they're going to hurt the economy. Well, the high jobless numbers, or quality jobless numbers, let's say that, that actually indicates that they're not hurting the economy yet. So the Fed is probably going to keep hammering. So because the market's smart and the market knows this, the market said, okay, the Fed's probably going to keep on going. Well, that causes a dip in your stock prices. Okay. So the stock prices have dropped mainly because people know that because the jobless numbers were good, the Fed is going to keep hammering away. Also, they talk about the Bank of England. Bank of England said it would purchase bonds in an effort to help steady its financial markets and the cratering British pound. Sterling has stooped to record lows against the U.S. dollar in recent days. So the value of the British pound has absolutely collapsed. Something's happening with their monetary policy. They're doing something ridiculous and crazy over there, and a lot of people are really upset about it. And why is this important? Well, I always mention my dissertation chair, who's a wonderful guy named Andrew Caroli, who's now, I believe he's at Cornell University. He's a dean or something there. And Andrew, we would talk when I was working on my dissertation, and he was an expert on something called financial contagion. Financial contagion is basically this idea that when one economy goes bad, it can affect other economies around it. Or when one company goes bad, it can affect other companies around it. Think about it in your own family. Think about it when it comes to disease. If one person in the house catches a cold, then what happens? Everybody else could catch the cold too. But also you can do that. You have economic contagion in your family as well. Let's say that I do business with Willie. Willie does business with Sally. Sally does business with Fred, and Fred does business with me. Well, if Willie has a financial problem and Willie can't pay his bills, then that's going to affect Fred, which will affect Sally, which is going to affect me. So it all rolls downhill. There's sort of this connection there. So the Bank of England is making some really interesting policy mistakes. People believe these are mistakes. These mistakes are trickling into your stock market. They are affecting your bottom line. Some of y'all lost money today because of what they did in England. Ain't that crazy, right? So there we go. All right, so reading on here, they said we are skeptical that the calmer mood in markets on Wednesday marks an end to the recent period of elevated volatility or risk-off sentiment. So risk off sentiment basically means that people are scared, so they don't take risks. For a more sustained rally, investors will need to see convincing evidence that inflation is coming under control, allowing central banks to become less hawkish. What does that mean? They have to see evidence that that inflation is going down, which will keep the Fed from being so aggressive and increasing their interest rates. Hawkish is that they're aggressive. They're just fighting. We're gonna raise. So right now your Fed is very hawkish, and they have a saying in stocks that says, "Don't fight the Fed." So basically, if you think that your stocks are just going to start taking off tomorrow, you might want to slow your roll a little bit, partner, because the Fed is very serious about kicking the stock market in its ass if necessary in order to get inflation under control. They do not care about the value of your portfolio. So, but here's the thing. I believe this is a great time to invest. If you are a long-term investor, if you're talking about 2-3 years down the road, most indicators say you're going to be just fine. Also, in fact, actually, those of you who are in our Prime program, we're going to meet tonight. Feel free to join us at drboyceprime.com, because what I'm going to show you tonight are ways that you can actually still make money in this market. Ways that you can pick the right stocks, ways that you can sell your call options, ways that you can position your portfolio in certain ways so that you can generate income. I'm generating income even as my stocks are going down and up and down in value. The income doesn't stop flowing. There are ways you can secure that. So if you'd like to understand how to do that better, feel free to go to drboyceprime.com. I will show you exactly what I do with my own portfolio and what I do with my family's money. Okay, so let me move on here. Hit the thumbs up button. Thumbs up, share, subscribe. In general, those are kind of the big news items for today. There isn't a whole lot else to talk about other than the jobless report, what's going on with the mortgage rates. And also they said weak sentiment signals a short-term buying opportunity. So Alliance Bernstein says extremely poor investor sentiment, meaning investors are feeling bad. Investors are feeling scared right now. That they claim that points to a short-term buying opportunity, pointing to its composite sentiment indicator that triggered a buy signal. The signal came ahead of 4 positive weeks more than 70%. Sorry, the signal came ahead of 4 positive weeks, more than 70% of the time of the last 22 years. So they're saying 70% of the time, this indicator is correct. They said, we consider the signals a potential short-term tactical buying opportunity, but remain cautious on equities over a medium-term horizon. What does that mean? That means that right now they're saying that because everybody's scared, this might be a good time to buy stocks if you are in that trading space. If you're a shorter-term trader, that this 500-point drop could be an opportunity for you to make a little bit of money short-term. But once you get those gains again, once you have an up cycle, that's when you kind of lock in your gains. That's when you protect your portfolio. Maybe you set up some trades that will protect you from the downside. Maybe you buy some put options. Maybe you take some money off the table. Maybe you diversify. Maybe you do some things that are going to minimize your risk. Because believe me, every good day is going to be followed. Every couple good days is going to be followed by a bad one. You have that type of market right now. You do not have a market with like you had in 2020 where everything was up all the time, no matter what. That ain't going to happen. So ultimately, this is a great environment for people like me. Like, we have fun in situations like this because now the world is making sense. Now it's not like 2020 where everybody was claimed to be a stock market expert because everything was going up. If everything's going up, then stock picking is very easy. It's like shooting fish in a barrel. Now you don't have that environment anymore, so you have to be a little more selective in how you move. All right, guys. So anyway, let me hit this button again. Sorry, I lost you on my video for a second. Please forgive me for that. All right. So by the way, I want to remind everybody this week in the Black Business School, we actually have Dr. Christina Parks coming in to visit. She is going to talk about all these jabs and chemicals that they offer to your children and what this means. She's an expert in cell and molecular biology. So I invited her to come in. We're doing the event privately because we don't want to do this on YouTube because they don't like these conversations publicly, but it's a private event. It's free to the community. If you'd like to join us on Friday, just go to boycewatkins.com and look for the Dr. Parks event. That's going to be on Friday. Also, for those of you that want to get the archived versions of all the lectures. You might have been there last night. We brought in Dr. Claude Anderson. We were analyzing Powernomics. We do this every single Wednesday. And if you want to get the archives, there's probably I probably have done about 60 lectures on these topics, on his books, breaking every ounce of his books down. If you'd like to get the archives, you can actually get everything for massive discount today only. Just go to boycewatkins.com. And that's pretty much it. So I hope you guys have a great day. God bless you. Please hit the thumbs up button on your way out. I love you, and I'll see you soon. Take care now. Peace.